In the heartland of America, under the wide open skies of Omaha, a man known as the Oracle quietly sounds a warning. At 94 years old, Warren Buffett is not shouting doom, but his message is unmistakable. We're on the edge of disaster. It begins innocuously, a record-setting cash pile. An investor once famous for his long-term bets, suddenly huge in liquidity. Over $330 billion sitting idle, not because Buffett is complacent, but because he's deeply worried. At Berkshire Hathaway's annual meeting, Buffett's typically plain-spoken, folksy demeanor hit a steely resolve. He told the crowd, "Fiscal policy is what scares me. Paper money can see its value evaporate if fiscal folly prevails." For much of his career, Buffett has preached value investing, but now his strategy feels more like a fortress, stockpiling cash, waiting, watching. It is here, in this calm and deliberate approach, that the Oracle warns us the storm is not coming tomorrow, but it is brewing. To understand why, we must travel back in time to see how his worldview was shaped and why today he believes we might be teetering on economic collapse. Buffett's journey from a modest boy in Omaha to the head of a trillion-dollar conglomerate is legendary. He began with value investing under Benjamin Graham, learning to see companies not as tickers, but as businesses. For him, money is not just about accumulation, it's about preservation, stewardship, and responsibility. Over decades, as Berkshire grew, from insurance to railroads, from utilities to Apple, Buffett developed a philosophy: build strong companies, generate cash, and only invest when the risk is manageable. Fast forward to today, Buffett sees danger everywhere. First, valuations. The so-called Buffett indicator, the ratio of total stock market capitalization to U.S. GDP, is soaring, potentially exceeding 200%, a level he once warned only happens in bubbles. Second, debt. The U.S. fiscal deficit is not a talking point for Buffett. It's his white whale. He warned of a dangerously contagious bureaucracy, and he called the growing deficit both reckless and potentially ruinous. Third, the currency. Buffett is haunted by the fragility of paper money. In his words, "There's no great system for beating currency risk anymore." He fears that excessive borrowing and political short-termism will erode the dollar's value, a risk not just for Berkshire, but for every American who relies on it.
But Buffett's warnings don't end with debt and valuations. He sees warning signs elsewhere, in geopolitics, in trade, and in technology. At the 2025 shareholders meeting, Buffett didn't mince words about trade tensions. He said trade should not be a weapon. He emphasized that trade must be cooperative, not confrontational. He argued that America should double down on its strengths rather than impose tariffs or punish partners. The message was clear. Protectionism risks global instability, and that instability risks business. Then there's technology, a domain Buffett has long admired but now approaches with a furrowed brow. He warned that AI might be more beneficial for scammers than society. He recalled seeing a convincing fake video of himself created using AI, and he leaned into the ominous comparison. AI is like nuclear weapons. Once unleashed, how do you put the genie back in the bottle? Buffett's time is passing. At nearly 95, he announced he will step down as CEO of Berkshire at the end of the year. handing leadership to Greg Abel. But in his final annual meeting as CEO, his tone was not triumphant, it was sober. He stressed that he wasn't stepping away lightly, but with urgency. He said he worries about what comes after him. Can his successor navigate this precarious world? Let's unpack what Buffett fears in practical terms. What exactly is driving his apocalyptic tenor, and why should we listen? Berkshire's cash isn't just high, it's near historic levels, around $334 to $347 billion by some estimates. That's more cash than Apple, Microsoft, and Nvidia combined, depending on how you count. Buffett hasn't thrown that money into speculative tech. Instead, much of it sits in short-term treasury bills, a deliberate move. He sees no bargains, only inflated valuations and crowded markets. This isn't a defensive bet, it's a warning. Buffett worries that government overreach could lead to runaway fiscal spending. In such a scenario, inflation becomes more than a nuisance. It becomes structural. He has explicitly linked poor fiscal decisions to weakening currency. He warns that if fiscal folly prevails, paper money can evaporate. That's not hyperbole. For Buffett, currency risk is existential. It's not just about losing purchasing power, it's about losing trust in the system. Buffett's call to stop weaponizing trade is not just philosophical, it's deeply practical. For a multinational conglomerate like Berkshire, boots on the ground in dozens of industries, trade disruption is existential. He fears that short-term geopolitical games could fracture the global economy and undermine the businesses he has spent decades building. Buffett sees technology as both promise and peril. His warning about AI is stark. Scamming could become the growth industry of all time. He has said he doesn't fully understand AI, yet he recognizes its power. He likens its potential for harm to that of a weapon. Once unleashed, can it be controlled? That's the question he fears most.
Buffett's warnings might sound dramatic, but they're rooted in a lifetime of observing human nature, markets, and cycles. And though he is one man, his insights carry weight for a reason. Buffett's career spans decades. He has seen crashes, .com, 2008, and more. He knows that booms end. He has seen empires built and collapsed. He has watched governments overspend and markets overheat. His current caution is not born from fear, but from experience. Buffett is not worried about a typical correction. He warns of structural risk, debt that can't be repaid, currencies that could lose value, and geopolitical tensions that could unravel global trade. His message to policymakers is piercing. At the shareholder meeting, he chastised Washington. Be careful where you tread. He emphasized that capitalism needs participants, people who have money, and trust in the system. If those are lost, the engine of growth falters. Buffett is stepping aside, but he's making one final important contribution: leadership grounded in prudence. His warnings are part of that legacy. As his successor, Greg Abel, takes over, that counsel becomes a beacon. This isn't just about Berkshire. It's about what kind of economy we want to pass on and whether we listen to voices calling for caution before it's too late. So, what now? Buffett will continue to hold his cash patiently. He may deploy capital when the time is right, when he sees real value, not hype. He will press for fiscal discipline, for stable currencies, for trade that unites rather than divides. And as he steps down, the world will be watching to see if his successor carries that message forward. But beyond Berkshire, this is a challenge for all of us: investors, citizens,
policymakers. Are we willing to heed a warning from one of history's greatest investors? Will we view risk not just as a number on a chart, but a responsibility? Warren Buffett has never been a doomsayer, but today he stands at a crossroads, calling for vigilance, restraint, and wisdom. He's urging us to remember that prosperity is not guaranteed and that today's strength can mask tomorrow's fragility. His warning, "We're on the edge of disaster," is not a prophecy, but a wake-up call. Because if we ignore it, we might sleepwalk into a storm of our own making.